Hi traders, this is Cynthia of Day Trade Forex, and I'd like to introduce you to my new Fusion Advanced template, which is the ultimate retracement system. And the advanced template is available to purchase after you've already purchased the basic template. So it would be good to watch some videos that I've created to introduce you to the basic template first, and then it's possible that you might want to upgrade to this advanced template. And I've created profiles for the advanced template, and you can see the currency pairs down here at the bottom that I've included in the advanced profiles. They happen to be what I consider the best moving currency pairs that have the highest average daily range. Here's a little indicator that I always have on the charts. ADR means average daily range, and I try to pick currency pairs that have more than 75 pips per day averaged over 10 days. The advanced template has all of the same basic indicators that are available with the basic template, but I've added a few extra things to the advanced template. The first thing that you might notice is that I have my trade button on the chart, and it is a one-click buy or sell, and it automatically places your trade with your broker, and it'll place the take profit and the stop loss, and it trails and does everything that you'd want it to do. You can click close on any chart to close the trade. You can click reversal, which means it will automatically immediately close the existing current trade and reverse it. So it'll place a reverse trade going in the opposite direction with the take profit and stop loss and the trail. Then there's the potential buy and potential sell, which are your pending orders. And in the training PDF, I include a video that teaches you in depth how to use the trade button. It also comes with currency set files for scalping, day trading, and swing trading for any currency pair that you choose to trade. The profiles have these specially selected charts. What we're looking at right now is the pound yen. All of these charts open in the profile in a 30-minute chart. And here's the pound odd 30-minute, pound USD, Euro USD. I like to trade the Euro USD when there's US economic news releases. Here's the USD CAD. I also like to trade that with US or Canadian economic news releases. Here's the Euro odd, which is one of my favorites. Euro New Zealand dollar is also one of my favorites. And the CAD JPY, which sometimes moves really well, and it always gets started in the Tokyo session. So if you're a US trader, then you'll like the CAD JPY in the Tokyo session. And here's the CHF JPY, which is something that doesn't really move that well most of the time, but it can be traded in the Tokyo session also. Now, any of these charts can be switched out for a different currency pair, so you're not really stuck with any of these. You can change them as you desire. Say you have some favorite currency pairs that you'd like to trade more than some of these that I've included. You can switch them out, and you can also change the time frame. And in the PDF, there's a video that shows you how to organize and modify the profiles. Using profiles really simplifies your trading life, and it cuts down on the amount of choices that you have, because one of the problems in Forex trading is that we have too many choices and we get confused and overwhelmed. So I have included only 9 currency pairs in the advanced profile, and like I said, you can switch any of these currency pairs to substitute for something that you like to trade better. One of the other new features or indicators in the advanced template is this window, which is the CCI window. And these are special settings that match the color-coded candles that I use. These candles are not Heikin-Ashi, but they're also not regular candles. They're trend candles, and they show the major trend, but I have it set so that the candles will also show you retracements. And everything about the candles are coordinated with the CCI indicator. The CCI indicator is a really sophisticated indicator, and it gives you a lot of information at a glance just in this one window. It's like a combination of the RSI and the MACD, and we have levels. The trigger levels for placing a trade are a 100 level and a minus 100 level. So the trigger line is this yellow line. So if in the top window you think you have a buy opportunity, your eye would drop down and you would look to see if the yellow trigger line is touching or passing the 100 level. If it is, it means that there's sufficient momentum behind the trade to warrant actually placing a buy trade. And also, if you're interested in placing a sell trade, the yellow trigger line for the CCI indicator needs to be touching or passing the negative 100 level. And over here you can see this is negative 100 and plus 100, and there's a 0 line where the dots, these are momentum and trend dots also, they sit on the 0 line. But the yellow trigger line for actually ensuring that you have enough momentum to place a trade is this yellow line, which needs to cross the 100 level or the negative 100 level. And of course the trend bars need to be the same color. Everything is color coded, so everything needs to agree. And if you just have a little dot and no trend bar, it means that the trend has not really gotten started. It's showing you the trend direction. A blue dot is showing you that the trend is up, but the trend hasn't really reached a lot of strength. But then when you see the trend bars get very long, then that means the trend has exploded. And then also you can use this CCI indicator as divergence, because if you know anything about divergence, you know that divergence can be a leading indicator showing you either failure of a trend or trend reversal itself. So I really like the CCI indicator because it gives you a lot of information, and I don't place a trade unless what's happening in the top window agrees with what is happening down here. So for instance, right now the candle is purple, the price is moving down very slightly, there's not a lot of momentum, the trend bar is purple, so that agrees with the purple candle. And if your eye goes down to the CCI window, then the trend bar in the CCI indicator is also purple, but it's not ready for a sell trade actually, because the yellow trigger line has not touched the negative 100 level yet, and until it does that, we don't place a sell trade. And that keeps us out of trades that possibly will reverse very quickly, because without momentum behind your trade, you can be caught up in a fast reversal, which always is very discouraging. So we want momentum to be on our side, so we always wait for this yellow CCI trigger line to cross the negative 100 level for a sell trade and to cross the positive 100 level for a buy trade. And then of course you can't have anything blue happening on the current candle, because that would tell you that the trend is mixed, and what we're trying to do is find the best possible entries with momentum behind our trades so that we can get something reasonable out of our trade and do it quickly also. So that's the CCI indicator, and I'll explain that more in another training video inside of the training PDF that you get if you purchase. And in the bottom window is my multi-timeframe zero lag MACD, and in the basic system you only have the yellow 4-hour trend line, and in the advanced system I've included the daily orange trend line. You're going to get the best trades when the yellow line and the orange line are on the same side of the purple zero baseline. So this is the baseline, and right now you can see that the daily orange trend line is above the purple baseline, and the yellow 4-hour MACD trend line is below the purple baseline, but it's closer to the purple baseline, so that shows you that 4-hour trend is a little on the weak side for a down trade. Because the daily trend is still above the purple trend line, that means that the overall major trend for the daily time frame is actually up. So you have a mixture of signals here. The 4 hours down, the daily is up, and you're not going to get your best trades that way. I would always wait for everything to confirm, and you want these two lines to be on the same side. For instance, here, this was a nice down arrow. All of the arrows in the Bollinger Bands are saying to sell, so your eye would go down. You have the purple flat trend line, and the CCI dots are purple, and the CCI yellow trigger line has passed the negative 100 level, and you can see that the daily trend line is still above the purple baseline, so the trend actually didn't go very far. If I use my crosshairs and assume we got in there and got out at the Fibonacci support 1, that's 33 pips. So that trade didn't move a lot, but we can show you some other examples, maybe on a better chart where price really moves better. Here's one buy entry right here. All of the Bollinger Bands have agreed and have their arrows agreeing. The flat trend bar is blue, so that shows you that the trend is up. The CCI dots are blue, and the yellow trigger line has passed the 100 level, so you have sufficient momentum. But the interesting part is that the MACD is showing you that the daily orange trend line is up above the purple baseline, and it's pretty far away from the purple baseline, so that's showing you that the daily trend is still very strong. And at this point, right in here, the yellow 4-hour trend line has crossed above the purple baseline, and so that's actually showing you ahead of time that the future trend is going to reverse and go up. And because you're in a bunch of consolidation right here, it's really nice to know ahead of time which way the consolidation might break out. We don't know usually, and with most trading systems you would never know. If after consolidation and a breakout occurs, there's no way to tell ahead of time which way the direction will break. But with this indicator, because it's a leading indicator, the 4-hour trend is up and it's broken above the purple baseline, and it's green now with the daily trend. So that tells you even in consolidation, the 4-hour trend and the daily trend is up. And then the real entry comes when the yellow line crosses the orange line. So that's a real surge of trend and momentum, and so then that would be your buy entry right there. So it's a perfect buy entry, and right in here it shows you that the uptrend is very strong. Now you can see that after the uptrend the candles turn purple again, so price is retracing, and you can see that the yellow 4-hour trend has broken down below the daily orange trend line, so that's telling you the uptrend is over. So that's a good place to exit. And also you can see your CCI trend lines are shrinking down, and that's telling you that the trend is slowing down. In the flat trend area it's black. When it's black, then it's telling you there's no trend. And so this would be your pullback here. And when you see these things happening, especially when the yellow MACD crosses the orange MACD, that's a big signal to exit your trade, because trend is stalling and there's no reason to stay in a trend when the trend has stalled. And also the little pink arrow, which is your fast Bollinger Band retracement arrow, has appeared. So when you see that, you can get out. However, in the training I teach you to trade always between Fibonacci level to Fibonacci level, and that you plan your trade ahead of time to know exactly where your exit's going to be. So in this case, if we actually took the buy trade, I would know ahead of time that my first target is going to be Fibonacci resistance 1. This is the green line right here, and I would book partial profit at this first Fibonacci resistance, because you never really know ahead of time how far a price is going to go. So it's always prudent to just book half of your lot size, leave the other half open, and then on the next candle you see that price does reach Fibonacci resistance 2, and the candle after that actually opens at the resistance level and then closes after that at a lower price, and then the purple candle appears. And so that's telling you that Fibonacci resistance 2 is the place that you actually should have exited your trade completely. And if you haven't, then you have these other signals to tell you to close. The one thing is the pink candle appearing. That's your retracement candle. That's your fast Bollinger Band trend line and arrow. And then the flat trend area is black. The CCI trend lines are sloping back down, and these multi-timeframe zero lag MACD yellow line has crossed down below the orange daily trend line. So you have lots of ways to see where to exit, but basically I teach that you enter at the Fibonacci level and you exit at a Fibonacci level, whether it's a partial exit or a full exit. And this entry right here that we've been discussing is actually sitting right on the Fibonacci pivot level, which is a great place to enter. It's also a great place to take partial or full profit and exit. And on this sell trade, you can see we entered the sell trade close to the resistance 1. We sold. Our first target level would have been the blue pivot level, and we would have taken partial gain, booked half of our lot size and let the other half ride. And then down when it hits support 1, it basically just kind of bounces off support 1, but it's support 1. This is a Fibonacci level, so you could have closed the other half of your trade, and then 2 bars later price actually does reverse. But this is the CHF JPY, which doesn't trade in great trends. You can see here the ADR is only 52.8 pips averaged over 10 days, so that's not a great example, but it does show you how you can use the Fibonacci lines to plan your trade. You know when you enter it's going to be around a Fibonacci level, and when you exit you have the Fibonacci levels to plan your exit ahead of time. In some of these other bigger moving pairs, like this is the pound US dollar, the average daily range is 73 pips, so you do have some better movements. And if I used my crosshair and show you, this was a 28 pip move, then you have a retracement. You would take partial profit at resistance 3 and then re-enter again on the pink arrow after the retracement, and then take another partial profit at resistance 2. That's a total of 52 pips so far. Then you have 2 bars of resistance, and then you re-enter right here. You can take another partial profit right here. That's 50 pips total, and just keep moving your stop. And right here on resistance 1, that's 63 pips. Here on the Fibonacci blue pivot level, we're already down to 85 pips. And then right here, where actually this is where the price finally stalled out at support 1, that's a total of 110 pips. But if you have 1, 2, 3 entries, 3 positions, then that's more than 110 pips because you've entered multiple times. Even if you do book some partial profit at these Fibonacci levels before the retracement even happens, and then you jump back in with a full position again, you're going to gain much more than 110 pips, and it's really easy to do. And then price goes into consolidation, which is what always happens after a big long move. And you can see here, oh, here's a great example of divergence. I was looking for some. See how price is very flat during all of these candles? This is many hours of just flat, no trend consolidation. And in your CCI window, the yellow trigger line shows you, it's like an RSI line, and it can show you divergence. So here you see that the yellow trigger line is starting to slope back up, as well as the trend bars in the CCI. So everything's sloping back up. You can see that if you draw like this. And then divergence is when price and momentum do exactly the opposite thing. So here you have all of this price action that's totally flat, and then the CCI is giving you an uptrend. So it's telling you at this point price is stalled out and the price is going to start reversing. And this is about the point where the price does reverse. You can see the gold arrow and the gold major slow trend line. Now the major trend is up, even though it's very small. This is not great movement or anything, and you wouldn't make a lot trading in this small range. But if you enter and exit at your Fibonacci levels, then at least you have some pretty safe trades, and you're not going to be caught hoping and wishing that the price will keep going just to be disappointed, because you've already planned your trade ahead of time. You've already planned that at the first Fibonacci level that you're going to take partial or full profit. So that's how important all the indicators are when you use them to work together. It's a big picture, pieces of a puzzle, which you have to learn how the pieces fit in the puzzle. And that means starting with the basic template and learning the basic indicators, and then upgrading to the advanced template where you have the CCI indicator, which really gives you a lot more information. And you also have in the MACD, you have the daily orange trend line, which gives you a lot of information. And on this downtrend, another way to see when to exit, when to get out of this sell trade, is when the yellow MACD 4-hour trend line crosses the purple zero baseline. When you see it start to move up like this and then actually cross the purple baseline, that's your last point of exit. You should have exited somewhere in here anyway, but if you haven't exited yet, when you start to see the yellow trend line, the yellow MACD trend line cross and head back towards the purple baseline and then actually cross it, that's your clue to exit. You're not going to get any more downtrend, and then it goes into consolidation, and the 4-hour MACD has already given you a clue that the trend is now going to be up, at least for the 4-hour, but the orange daily trend line is not on the same side of the purple baseline. It's not on the same side with the yellow. So you have 4-hour, which is up, but daily, which is down. And you can see what we've got all because of that is this very small range action. It's not a big range here, and that's because these two are not agreeing. So to get the best movement always, like here was the beginning of a really good movement because the 4-hour MACD and the daily MACD are both on the same side below the purple baseline. So that's what you're looking for. So that gives you confirmation that your chances of encountering or discovering or participating in a really strong trend your chances are better than if you were to enter a trade in a condition like this. Now that doesn't mean that you can't, but it just means that you have to plan to scalp. When you see both MACDs on the same side of the purple trend line, then you know you're looking forward to a really strong trend, and that gives you some confidence to stay in the trend. So when the price pulls back, like right here, 2 little blue candles and a little blue arrow, and then 2 more blue candles, another retracement, and the white X's, you don't panic or freak out or exit your trade prematurely. You welcome the little pullbacks as another trade opportunity, because after the pullback ends and you get another little pink arrow, that's when you can re-enter for another trade. So this makes pullbacks our friend, where in other trading systems it's really hard to see the pullbacks and it's hard to see the major trend. But with these Bollinger Band lines, which react to volatility, then you always know what the major trend is. You even know what the medium trend is, and you can see the fast trend. But the fast trend, the fast Bollinger Band trend line, also shows you the retracements. So after the retracement's over, you can re-enter with another trade position. So that's the beauty of this retracement system, with all of the indicators working together to give you enough information to give you a sense of confidence when you do manage to get involved in a good strong trend to play the retracements. That's where you can make some real money, when you keep entering and then partial exit and re-enter again, and then another partial exit and then re-enter again. Usually you can do that about 3 times, but that's only in a currency pair that has an average daily range of at least 70 pips. And we can look at the pound Aussie, which has an average daily range of 89, and you can see here, starting in the Tokyo session, that's a total of 102 pips. So after spread, that's close to 100 pips. You enter here. Of course, I've failed to mention that the Fibonacci support and resistance lines do readjust every day at 5 p.m. Eastern, based on what the price action was for the previous 24 hours. So back here, the Fibonacci support and resistance lines would have been completely different. They would have been revolving more around the price action in this 24-hour period. So it's kind of hard to go back and say, well, we entered at this Fibonacci level, but we exited at this Fibonacci level. So here, this is the last 24 hours. This would have been an entry here at Fibonacci support 1, partial take profit at the Fibonacci blue pivot line, and then price almost reached up to resistance 1, but it didn't quite make it, just by a few pips. But then you get the little pink reversal arrow, and so that little reversal arrow tells you to exit. And plus it's getting close to 5 p.m. Eastern, which is this dashed line. This is 5 p.m. Eastern, this is 5 p.m. Eastern. So the period separators are really important, because always when you get close to 5 p.m. Eastern, price goes into consolidation, so you definitely want to take your exit before that. So that's the advanced template, and I hope that it seems interesting to you, and I think that you're going to enjoy the extra indicators because they give you a lot of information. You've already prepared yourself by learning the basic indicators and the basic template, so you really only have the trade button to learn, the CCI indicator to learn, and the orange daily MACD line to understand. And so that's not all that difficult. It's pretty easy actually, and you get used to it really quickly, and you can make some fabulous retracement trades in some of these currency pairs that move a lot. So here's the Euro odd, one of my favorites. Look at all these entry, pullback, entry, pullback, consolidation, entry, pullback, entry, consolidation. So as long as you stay in the major trend of the gold Bollinger Band, then you know that you will only be looking for buy trades and looking for the little retracements like right here, so that you can enter again. And so using the Fibonacci support and resistance levels really helps you plan your trade and gives you confidence of when to enter, confidence of when to exit, and a money management that I've explained very briefly that really can accelerate the number of pips that you can book. So thank you so much for watching, and in the next video I'm going to be explaining the extra advanced template, which has even some more sophisticated indicators. And once you've learned the advanced template, then you'll be ready to upgrade to the extra advanced template, and you'll understand how all of this works with the new indicators that I've included in the extra advanced template. Very sophisticated things that professional traders actually use for their trading. So again, thanks for watching, and be on the lookout for my introduction video to the extra advanced template. Thanks again.